Here is your market wrap for January 26, 2026. System liquidity surged to an opening balance of 3.91 trillion naira, representing a substantial 1.12 trillion naira increase from the previous session. This liquidity boost was driven by the latest tranche of FOC inflows combined with additional coupon payments hitting the system. Despite this massive influx of cash, money market rates held their ground. The open buyback and overnight rates remained steady, closing unchanged at 22.5% and 22.79%, respectively. The NTB secondary market began the week on a subdued note as investor attention shifted toward the FGN bond auction. Despite the overall quiet tone, the long end of the curve saw some traction, with the 22 January NTB trading around the 17.15% level. Similarly, the 7 January NTB was quoted at a 17.3% bid and 17.15% offer. In the OMO segment, the 22 September paper saw activity at the 19.1% bid and 19.0% offer. As a result of these trades, the weighted average benchmark yield compressed by 3 basis points, finishing the day at 18.46%. The FGN bond secondary market started the day quietly as investors turned their full attention to the primary auction. The Debt Management Office offered 900 billion naira across the 2031, 2034, and 2035 maturities. The auction saw overwhelming demand with total subscriptions reaching 2.5 trillion naira, leading the DMO to a lot 1.54 trillion naira. Stop rates for the session settled at 17.62% for 2031, 17.5% for 2034, and 17.52% for 2035. The average benchmark yield in the secondary market edged lower by 1 basis point to finish at 16.72%. In the currency market, the naira showed a split personality. It strengthened in the official NAFEM window, closing at 1 to the dollar. The equities market was incredibly quiet, closing almost perfectly flat with the all-share index up just 0.003%. Market breadth was evenly split, showing investor indecision. What's next? In the fixed income market, we expect investor sentiment to be primarily steered by the market's reaction to the latest bond auction results. For the money market, interbank rates are projected to remain stable and range-bound due to the current liquidity surplus. However, we anticipate that the CBN may float an OMO auction to mop up excess funds, especially as significant OMO maturities are expected to bolster system liquidity further. Stay tuned for further updates. Visit our website at www.eradpartners.com for daily market insights.